Hello, everyone. This is Kathy Lien. Welcome to my Monday Caffeinated Market Buzz. I've got my coffee here, and I hope that you do too. So let's go ahead and do a sound check first. I want to make sure that everyone can hear my voice, see my screen. And if you can hear my voice, see my screen, just type in yes into the chat box, and we'll fire away and get started. Let me know that you can hear and see everything properly, especially my BK members here. Can you hear my voice, see my screen? I'm seeing people say hello, but I'm not seeing a confirmation that you can hear my screen. So please let me know that that is coming through. Wonderful. So as I said, welcome to Kathy's Monday Caffeinated Market Buzz. I had this fun name for it. We'll see how it goes. But I want to talk to everyone today because it's such a busy week in the markets, and we really need to kind of talk through all of the major event risks because there's a lot of important key things to go over. Actually, I had prepared a Excel file that I want to share with you. So let me just make sure that I move it over to this computer. But no surprise, of course, you know, we've got the focus on the US dollar this week. And the reason why we've got a focus on the US dollar is because we have the two of the most important event risks on the calendar this week, which is basically the Federal Reserve's monetary policy announcement, along with the U.S. non-farm payrolls report. Hands down for U.S. markets, not just for the forex market, but for the U.S. markets in general, these are single-handedly the most important event risks for the markets. And it's something that, you know, can affect, significantly affect how stocks trade, as well as how the US dollar trades. And for those of you that trade other asset classes, such as gold and oil, I am always talking about how the value of the US dollar and the direction of the US dollar influences how gold, oil, even Bitcoin trades. So that is why, you know, how the US dollar behaves off of the FOMC rate decision, along with the U.S. non-farm payrolls report, will affect everything. So I am dollar bullish. I am dollar bullish because we've got, you know, ahead of the FOMC rate decision, because we've got a lot of reasons why the Federal Reserve is going to be to maintain their view that only 3 interest rate cuts are expected this time. I don't think that there's a case for them to get more dovish. And the reason for that is I prepared this little table. Let me please confirm to me that you can see my table here on the U.S. Economy and the Federal Reserve. Fantastic. So when we have a major rate decision, it's really nice to take a step back and look at how did the economy change from one meeting to another, because we want to be able to put ourselves into the shoes of the central bank. And for those of you that are just joining me right now, we have a lot of people on YouTube. Welcome everyone to our Caffeinated, I've got my coffee here, Market Buzz on Monday, where we go through all of the major events of the week. So at Federal Reserve meeting, non-farm payrolls, the most important events on the calendar. And you can see comparing how the U.S. economy changed according to this table from one meeting to the other. There's a lot more green than there's red, right? And what this shows you is, first of all, retail sales is up, consumer sentiment is up, non-farm payrolls from the last meeting is up. And remember, the Fed is meeting before they get the January NFP report. Inflation is hotter than they would like. Housing market shows signs of stabilization. Stock market really hasn't moved that much. The only area of the economy, and is legitimately a little bit worrisome, is the manufacturing and services sector. You can see here on the bottom, the manufacturing sector is still below 50, which means that it's in contractionary mode. The services sector is lower than the previous month, which means that service sector activity is slowing. So if you were the Fed, and if you were to put yourselves into the shoes of the Federal Reserve, what should you be doing? What should you be thinking? Well, looking at how the U.S. economy, and the Federal Reserve has told us that they are data dependent. Looking at how the U.S. economy changed from one meeting to another, you can see there's a lot more reasons to be optimistic than pessimistic. So that is why I believe that, first of all, the US dollar will retain its bid going into the Fed meeting. And also, I believe that the Federal Reserve really isn't going to really shift their outlook on and their guidance at all. And, it's because, the data that we've seen more improvements than deterioration in the data. And this is how we kind of assess or kind of get a sense of which way the central bank can lean. So I think that the Fed is not going to be more dovish. So what does this mean for the markets? Well, for the dollar, this should be dollar positive. And there's a huge, huge misalignment between what the market thinks and what the Federal Reserve is telling us. The market is currently pricing in 5, not 1, not 2, not 3, not 4, but 5 interest rate cuts from now to the end of the year. That's 125 basis points of easing in 2024. Guess what the Federal Reserve has been telling us? You should know if you watch my YouTube channel or you watch my posts on Twitter. The market is only pricing in, the Federal Reserve is only telling us that they want to give us 75 basis points of, they think there's only a need for 75 basis points of easing this year. So someone's wrong, right? Is it the Fed? Is it the market? And based upon this table here, I think the Fed's going to tell us, or the Fed's going to suggest to us that the market is wrong. Of course, I could be wrong, but if I was going to put myself into the shoes of the central bank, I'd be looking at consumer spending is really healthy. Consumer confidence numbers have been really good, as you can see in my Fed table here. And the jobs market data has also been very, very good. So there's a lot of reasons for the Fed to be optimistic. But you do have to be careful here. And the reason why I say you have to be careful here is because while I think that the Federal Reserve is going to maintain their current guidance, which will mean that the dollar could probably maintain its bid going into and out of the Federal Reserve meeting. Friday's non-farm payrolls report may not be so great. And the reason why Friday's non-farm payrolls report may not be so great is because the market is looking for, and we'll look at that when we look at the table, a much weaker number. The market's looking for like 170,000 job growth in the month of January compared to like 217,000, I think, in December. So looking for significantly weaker job growth. They are also looking for the unemployment rate to increase. So while the dollar could rally into and out of the FOMC rate decision, as we get really close to Friday, I would not be long dollars. The trader in me says that we should be out of those trades because that NFP report could cast doubt on everything. And we have to see how bad it could be. Now, jobless claims have been very, very low. So it's not really that terrible, but you never know. So I am bullish dollars. I think, what's really interesting today is that US yields are down, but the dollar is up. And that's because, and even though US yields are so important, I think it is clear that the market thinks that the Federal Reserve, like me, based upon the Fed table I showed you, so it's not coming out of nowhere, that the Federal Reserve is going to maintain their current guidance. They're not going to grow more dovish. For stocks, this is probably, normally this would be bad for stocks, right? Because it means that the Federal Reserve is going to leave interest rates higher, but the markets kind of believed that that because we have an overall strength in the economy, that stocks will not fall that much if the Federal Reserve maintains its current guidance, because it's not like they're going to raise interest rates, right? They're just going to delay the rate cuts to later. And mortgage rates have come down a lot. You know, I was talking to my friend over the weekend. We were having dinner. She's a real estate attorney, and she was telling me how everyone's financing at 6% right now, which, you know, isn't too, I mean, it wasn't the 3-4% that we were used to be got used to, but it's not as terrible. So the housing market, as you saw in that Fed table I just showed you, and I'm just going to pop this up again, the housing market is showing signs of stabilization. NAHB index showing signs of stabilization. Pretty big jump in pending home sales, 8.3%. That's a pretty big jump. New home sales also 664,000. So really good numbers here. And I think you know the stabilization is going to continue. I think there's no question that the U.S. is going to outperform a lot of other economies. So I am bullish dollars this week. But as we get into NFPs, as a trader, I'd be out. Euro, I'm bearish euros. ECB, it was very interesting last week. Last week, the ECB basically said to us that inflation did not rise as much as they anticipated, which the market interpreted to be euro bearish, to be more dovish, and the euro sold off. But then afterwards, all these other ECB officials came out and said, wait a minute, I think you're overinterpreting this. Does not mean that we're getting closer to an interest rate cut, and the euro rebounded. But today you see the euro is lower, because I think ultimately the market does believe that the ECB is closer to lowering interest rates than they were before. And this week we have GDP and we have the inflation report. And we all know that inflation across the globe is softer. GDP report may not be so bad, but inflation across the globe is softer. And that's the most important piece of data for the Eurozone this week. And so that is why I am euro bearish. We also have a Bank of England rate decision this week. And I'm neutral sterling, although right now I'm kind of neutral bearish sterling. And I'll tell you later why. But the BOE is actually expected to be one of the central banks to raise interest rates later this year. They are not expected to lower interest rates until the second half, until June. Data's been kind of mixed. So this is an important meeting because everyone wants to see, has the Bank of England grown a little bit more cautious? Has some of the changes in data encouraged them to be a little bit more dovish? That is something that we're going to listen in very closely. And of course, the Fed rate decision is going to be more important than the BOE rate decision, and the market's appetite for US dollars will be more important, but still, I think the BOE rate decision is important, and I am actually leaning towards a little bit more cautiousness than optimism. The Australian dollar. So what's interesting about the Australian dollar is that the RBA is still, worried about high inflation, but data from Australia has been kind of terrible. We had really weak jobs numbers, and China seems to be in a whole mess of trouble. Chinese stocks are crashing. They have tried to ban short selling, done all these things to prevent the market from falling, which I think is indicative of how desperate things are. Evergrande, one of the biggest property lenders, is going into liquidation. All bad news. And China has not come up with this major fiscal stimulus package that everyone's hoping for. So all of that is bearish for Aussie. And we have Australian inflation data this week. And that could end up being bearish because consumer inflation expectations have been quite bearish lately. So I am bearish Aussies. I am also bearish Canadian dollars. Data from Canada has been quite terrible as well. And oil prices have been low in general. We don't have much going on for Canada this week. We have a monthly GDP number, which is not important at all. Dollar CAD is going to trade almost exclusively on the market's appetite for US dollars and how the US dollar is moving, and any Middle East troubles. But unfortunately, it seems like the market's become a little bit more resilient to any sort of bad Middle East news. the oil market that is. So anyway, I'm bearish Canadian dollars. I think, it's due for a little bit of a correction. The New Zealand dollar data hasn't been great. I mean, PMIs have been weaker, manufacturing services. Also, inflation data has been weaker overnight. We had the trade data that's been weaker. So overall, plenty of reasons to be bearish Kiwi. But the RBNZ has also said to us that they don't think rates really need to come down that much this year. So that is why we're neutral. And don't kid yourself. Kiwi is going to move exclusively on how stocks are doing, how US dollar is doing this week, because there's not much on the calendar. As will Swiss franc and the Japanese yen. Swiss franc is going to trade exclusively on risk appetite. The Japanese yen, last week with the BOJ meeting, and it was clear that because inflation is lower, the BOJ has no leg to stand on to walk away from their zero interest rate policy. They will need to this year. I'm standing behind that call that they will need to move away from ZIRP this year, but not right now. So that is why the yen is weak and the dollar is strong. That is why dollar yen is moving upwards today. But still, if we have a stock market correction, that is going to be bearish for dollar yen. Many of you are joining late. So I talked about how the Fed rate decision is going to impact stocks, gold, oil, and of course currencies and even crypto, because a lot of markets trade on a lot of those markets are measured against the dollar. Gold trades in dollar. A lot of crypto platforms trade Bitcoin in dollar. Oil is traded in dollars. So if the dollar rallies, those things are going to fall. If the dollar falls, those things are going to rally. So that is why the FOMC rate decision and the non-farm payrolls report is so important to the event rest this week. So we talked about the fundamental heat map, and this is what we do every day for our BK Trader members. Now let's take a look at the calendar, and then we'll go take a look at the charts. So Kiwi, I said that the data was weaker. It is better than the previous month, but we had a downward revision to the prior month's data. But Kiwi trade balance is not really that market moving. Today we have nothing going on. We have Australian retail sales tonight. So we have a couple of pieces of data that are important for Australia this week. Australian retail sales, we did have weaker consumer confidence. The PSI was a little bit stronger. So you can see the markets kind of mix on here. This is going to be an important number, but it's kind of difficult to handicap, so that it will influence how Aussie trades. Some of the other data will be more important, like Eurozone GDP numbers. We had slightly stronger retail sales and a stronger trade balance data. And so the GDP numbers from Eurozone, Germany in particular, could surprise the upside. Market's looking for a weaker number, but it could surprise to the upside. Same thing with the Eurozone release. There could be an upside surprise. This is one of the most important pieces of data for the Eurozone this week. And data from the Eurozone hasn't been terrible. IFO, ZOO sentiment have both been stronger, but unfortunately, it is the ECB was slightly more dovish. They're not convinced that these improvements are going to deter them from lowering interest rates. So this is important, and this is one, Euro is going to be in focus tomorrow. Much more so than the dollar, because we really have nothing going on for the dollar tomorrow. We only have house prices, which could show a little stabilization. This little number, the JOLTS, has been much more market moving than it has in the past, because the labor market is really the backbone of the economy, and those labor market numbers have been so good. This JOLTS number, job opening, is very, very important. If it drops, that's bad news. If it rises, it's bad news, because it means that there are more openings. But regardless, it's something that we watch closely. Consumer confidence, that's also going to be important. The UMich survey had a sharp rise in January, so that's going to be important as well. And then we have some minor data from the US, and then we have BOJ, retail sales, industrial production. Those numbers will be important. But in Asia, the main focus will be on Australia and China. The Australian inflation rate is due. I think it's going to be quite weak because consumer inflation expectations dropped. So that's probably going to be bearish Aussie. We also have Chinese PMIs. And even though the PMIs have shown signs of stabilization, I think that, China, we said, is a hot mess right now. And I think that the market's going to react more to a weaker number than a stronger number. And then things start to get interesting for the dollar. Our focus will shift back to the dollar. Yes, we have German retail sales, not a huge market mover, but it is important. It is expected to rebound. German labor market numbers are probably going to be bearish because the PMIs show further job losses. But the most important will be two things. Number one, the German inflation rate, which could end up being a little weaker because the ECB has been talking about lower price pressures. But nothing is going to be more important than the FOMC rate decision in the afternoon. Before that, though, we have Canadian GDP numbers, which will probably be weaker given weaker retail sales. We also have the ADP number, which will be a very important leading indicator for non-farm payrolls on Friday. If the ADP number comes in lower, like the market expects, 135,000 against 164,000, we could see the market start to think that non-farm payrolls is going to miss. But don't expect big moves because the main focus, it's just something they're going to keep in the back of the minds. The main focus is going to be on the Fed meeting. And if you're missing what I talked about, if you're coming in late, please rewatch the beginning because we talked a lot about the Fed meeting again, and it's going to be valuable for you to rewatch it again. But the Fed meeting is going to be front and center. We've got the Fed rate decision at 2, the press conference at 2:30. Both of them, the guidance is going to be much more important. To 2:30 is going to be much more important than the rate decision itself. And I don't think that there's enough there for the Federal Reserve to change their guidance because as you see here, there's a lot more green than there is red, which means that there's a lot more improvement in the economy since the December meeting than deterioration. So that is why the Fed is probably not going to change their guidance. That is going to be the most important event risk this week. Then on Thursday, we have the Eurozone inflation data, which is the most important piece of data for the Eurozone this week. And the Eurozone inflation data is expected to show softer inflationary pressures, which is why the euro is under pressure. We also have the BOE rate decision. No changes are expected. Guidance will be the key. How the votes fare, what the votes look like. Is it going to be 1-9 or is it going to be 3-9 like previous? All of that's going to be important. And the market doesn't expect the BOE to cut interest rates until June, which is later than the March-April rate cut by the Federal Reserve. And so if they confirm that, it's going to be positive for the pound. If they are less hawkish, that's obviously going to cause pound to sell off. And then jobless claims from the U.S., ISM manufacturing data, that's probably going to be weaker because manufacturing and services PMI was weaker. And then we go into non-farm payrolls. And this is where I told you, even though the Fed doesn't change their guidance and the dollar rallies, I'd be out by Friday morning before NFPs at like 6, 7 a.m. because non-farm payrolls are expected to be 173,000, which is much weaker than the previous month. The unemployment rate is expected to rise. Average hourly earnings are expected to weaken. So market is looking for a much weaker non-farm payrolls report, and that could be a little bit of a reality call. So charts. Now we're going to look at the charts. This is my zip chart. We had a beautiful Euro on Twitter. This was a zip Euro Aussie sell signal where we had a white candle and a 90 pip drop that we caught part of overnight, which was a really good trade. But I'm going to shift over to our standard moving average charts to go over the technical outlook. So euro dollar is below the 200-day SMA for the first time since mid-December, so more than a month. And it looks like it could move lower. Looks like it could drop to support at 107.50. That's where I think it could head. Of course, FOMC and FP could change things quite a bit, but is consistent with my view. The ECB has been more dovish. Eurozone inflation data is going to be a bit weaker, and the Fed is not going to change their guidance. Pound dollar. I am also bearish pound dollars. Pound dollar actually had is in the zip sell zone, which I like quite a bit. I'm going to show you right now. So pound dollars in the zip sell zone, I like that quite a bit. And I think it's rolling over. I think it come down to this region here around 126. Dollar yen still in the buy zone, above all of the major moving averages. It's going to trade cautiously ahead of the Federal Reserve rate decision, but it's still above all the major moving average, which is bullish. What's interesting is that U.S. yields are lower right now. U.S. yields are down 1% on a 10-year basis. Dollar Swiss is lower highs, lower lows. So I mean, a cross trade definitely tells us a short, Swiss against some of the, long Swiss yen could be an interesting opportunity. But dollar Swiss is coming downwards, 85.50 looking like support, but I don't think it's going to move that much ahead of FOMC. Aussie dollar showing signs of stabilization. This is a pretty big move. If it closes like this, it could rally 66.50, but I don't expect much beyond that. Kiwi dollar also showing signs of stabilization. For the most part, I think I'm going to be trapped in this range here between 60.50 and 61.50 ahead of the FOMC rate decision. And then dollar CAD is, I think, starting to move lower. I think I'm going to see a bit of stabilization here before it starts to perk upwards. All right. So if you guys like this, caffeinated market buzz with Kathy, please like this video. I really appreciate it. Subscribe to our channel, and you can check out my fundamentals course. I'm gonna let Boris fire away, and then we'll open up to questions. Many of you are asking about how to get the Fed funds futures, how market pricing in. Just type in CME Fed Watch tool, Fed funds futures. Click here. And you can see right away what is the market pricing in for, first of all, no change, 98%. For March, there's basically a 50% chance of a cut, 50% chance of no cut. And it doesn't get serious for a cut until May. All right, so Boris, do you want to, please feel free to chime in with questions. Boris, do you want to share your thoughts on gold and the equity market?
Yeah. I want to share my thoughts on a lot more because I'm really glad that everybody came in today because we had a major revamp in BK over the weekend, which I'm going to share the screen with. Hang on a second. Let's make sure you guys see me. So, while Kathy's been focusing and doing a great job on fundamentals, those of you who trade with me know that we're day trading every single day on essentially the 1 minute chart. So our view excludes fundamentals most of the time, and we're basically trading flow. And part of the success of the way we're trading is precisely because we are essentially really, really focusing on micro movements in the market with very, very defined setups and risks. I spent the whole weekend while Kay was working on the fundamental side, completely and totally recoding all of our indicators to make them even better and stronger and sharper and more exact than they have been in the past. And I just wanted to share with you some of the things that I did. So those of you who are not part of BK can get a glimpse of everyday trade calls that we're getting. As a matter of fact, we're up $500 already this morning off the trade calls that the indicators gave us so far. But
and you target $1,000 a day, right, Boris?
We target $1,000 a day. The day really hasn't even started yet, and we're already up $500. If you want to see, the numbers, we're actually up another $29 right now on this trade, and then in this other account, where's my other account? There's my other account. Yeah, we're up to we started at 400, and we're at 640 over here on 1,000,004. So we're doing very well. But what I really wanted to kind of give everybody an eye glimpse of is the fact that the indicators that that we trade are all basically either trend or counter trend indicators. And you can see if over here if it's marked as an R, that's a counter trend trade here, and if it's marked as an M, it's marked as a trend trade. And what you see here in the US 30 is how well it actually picked both the tops by selling the European Open and then buying the trend trade at the European after the reversal trade made profit, buying it and selling it back up over here. The cool thing is, though, because I know so many of you, we trade primarily equities, gold. That's all we trade: Nasdaq, US 30, and gold. But there are so many of you that are FX junkies and have been begging me, how can you take all of these bounce indicators that you use for equities and gold, is it at all possible to apply it to FX? And the answer is yes. I just completely transformed it over to FX as well. So what you can see is that it will give you the exact sell-buy prices with the exact stop and target prices on FX now, completely adjustable to any FX pair. So if it's a 4-digit pair like pound dollar here, sell at 27.05. You can see over here clearly made target on the reversal side, or something like a dollar yen. Let me find a dollar yen here. Hang on a second. Let me just move this over. Where's dollar yen? Let's do pound yen. So pound yen is a pound yen is a two-figure number, and you can see here. Look, buying 87.68 clearly survives the stop. The stop is this red button over here. It makes target over here. So now this tool is just ridiculously powerful because not only can it trade FX, equities, gold. It can do it in the exact proper proportions that you need it to do. In other words, the stops and the targets are all intrinsic to the instrument that it's trading. Here's an example, for example, with gold, which everybody loves to trade. Look at gold, by the way. Look how well it picked the trend trade over here. It bought the gold at 227. I actually bought this trade. I had this trade over here, and we bought it at 27. I sold it at 30 today on the moves. So super powerful new way of basically trading not just equities, which is where we make pretty much all of our profits every single day, but everything else out there. And I think that's a super exciting new development at BK. If you guys want to come join us, Kay will drop a discount link into the chat. So please, take advantage of it. Come hang out with me for a month. Enjoy these indicators. See how well they trade. See how the trades are done. More importantly, and this is like it's not all. The other thing that I did this weekend is I integrated all of these indicators with our Discord. So now you can literally see if you go into my Discord here, if you go into my Discord area. So this is Kathy's area where she posts all of her FX trades. This is my area. My area now automatically posts all of these trades. You can see that we're long, for example, right now, US 30 for a different setup that we have that I can also show you. The trend setup that works. This is a one setup a day that we do that works really well as well as all of our scalp setups. And it just sort of showing you every single trade here as it triggers. So super exciting. I'm very happy to kind of refine all of these trades and tools over here. Let me show you just one last thing. Let me show you, this is the trade that we did this morning. So this is gold using our trend setup. This is, by the way, those of you who may have watched my video. I see a lot of people watch the video that I did with ChatGPT this weekend. This is the actual tool, like the one that I coded for ChatGPT was kind of the beginning tool, but this is actually the strategy off that tool that I made that's just been banking us money consistently for the last couple of weeks I've been trading it. And I, over the weekend, refined it even further. And what you can see here, basically, is that it shows you entry levels. It's trading only buy on the trend side of gold because gold is in a trend format. It's in a trend, long-term trend on a daily chart here, and so it's only buying bullish crosses on the gold. But here's what it shows you: it shows you where your stops are, where your first target is, where your second target is. So what's very cool is that you can see just how great the signals are. They just completely avoid the stops in gold today. That was a really great trade. And here we have just another thing that I want to show you, which is our NASDAQ signal. So it has a short NASDAQ signal. I just was away from the desk, so I didn't take it. But again, look at how cool this is. You came into the NASDAQ signal, it can actually show you the price that we entered in. So let me show you and go into prices instead of just buy sell mode. 17,454 was the entry, right? We're trading around what 31, so already almost to our target of 25 points. This is our target line over here, and you see how far away we are from our stop line. You see how easy it was in terms of avoiding stops. If you want to take a look at how this traded, for example, on.
But Boris, so they're looking at how to trade it, but how did they get this?
The only way to get this is to come join us at BK. These indicators are all totally private. They're not available on TradingView. You'll never see them on TradingView in any public forum. They're only available. They are TradingView indicators. They're super easy to install. All you got to do once you join us, it's literally click a button and it goes on your chart. But they're only available from us because they're privately coded by me just for our members, so they can basically use these tools to make money with me every single day. I live trade every single day. As a matter of fact, my live trading starts in about 10 minutes. And we're obviously going to discuss this in much more detail in my live trading room. But I wanted to kind of preview all of the coolness that I've been able to create over this weekend to just make it almost bulletproof. I mean, it is so easy and clean and clear to see exactly what you need to do. You can see, obviously, you're buying over here. You see this is your stop level. This is your target level. It will tell you everything. And it will tell you actually even the stops and targets. If you go if you move from prices to buy sells, it'll tell you exactly how much each one. This is for example a 50 target minus 100 stop right on the first target, and the second target would be 100 if you wanted to trade it this way. These are
Okay. All right. Great.
incredibly
All
high
right. Thank
profit
you so
targets.
much.
Sorry, what?
No, sounds great, Boris. Do you want to share your views on the Dow and what you think is going to happen in stocks this week
I
and
think,
gold?
yeah, I think right now everything that I see technically, which is the only way I can kind of call things right now, because I think the fundamental picture is just so unclear, is bullish. I mean, the Dow is bullish. Well, let me put it this way. What I see right now is Dow is bullish, gold is bullish. If we go to gold, gold is bullish, right? Gold is really nicely bullish. It's probably one of the best bops over here. That may actually dovetail with what Kathy was saying in terms of like if the non-farm payrolls are weak, that means the market is going to be very convinced that at least some, not all, but at least some rate cuts are coming. Any kind of a rate cut is very bullish gold, right? So that seems to be completely justifying itself on the charts. And the one thing that is negative, and I do think this is my true call, is that the tech stocks are really overdone. And I think tech stocks are very vulnerable. You see, tech stocks are bearish on the long-term trend, they're bearish on the intraday trend today. So I think they are vulnerable to a sell-off. So if I was to sort of make my macro views, I think the Dow is still okay. NASDAQ is very, very vulnerable to the downside, and gold is definitely a strong trade to the upside. Those are my calls for the week.
All right. Thank you so much, everyone. And we will see you again next time for our
Yeah, and
caffeinated market buzz.
thank you. It's so much fun having you guys. The offer is in the chat, in the YouTube chat. So if you want to hit that up, you get a chance to hang out with us for a month and get to use all these tools to your enjoyment. Thanks a lot, guys. I'll see you later.